Warriors. I'm Dale Pinkert. You're in face. Welcome, viewers from investing.com. Welcome to our community. Today, you're part of our family. Consider doing it more than once a week for your intelligence gathering for making actionable trading decisions. So how's everyone today? Yes, I see Ed Burton wants to talk about Larry Kudlow, and Kudlow's known for King Dollar. Maybe we'll have the dollar be king for a few days. I'm going to go over this here. But it's 5 a.m. Pacific Standard Time. It's pretty dark out here. My life is like a farmer, up before sunrise, asleep before sundown, after sundown, except that I nurture seeds of greed for the harvest of pips. Who's with me on that? Give me a why. Anyone feel greedy in here today? Few greedy people in the community. Well, you have to say we're at least honest in here, huh? Okay, so here's the big picture in the dollar. You know, we had two drives here. I'll show you, even on the daily, we diverged here. And I'm torn between whether or not we're going to get one more shot down to test this line for a 3-driver, or the market's going to try and squeeze out more dollar bears before that happens. So here's your weekly chart. Let's narrow it down to the daily. As you can see in the daily, there is potential if we start taking out this moving average at 90. This would shake out more bears. So I have some confluence off a wedge line up here and a downtrend line coming in around 91.30. If this is going to happen, it's going to imply another break in the euro back down towards 121.5 or so. So you could tell that the market is trying here. Also keep in mind we're approaching the end of winter and the beginning of spring, and one of Gann's big things was markets can change directions as seasons change. So we have the equinox on the 20th. Maybe the dollar rallies into that, gives Larry Kudlow a little bit of a king dollar. Perhaps we even get a rally in the S&Ps, and they do have to dig in their heels here pretty soon to jam it up for one more high. A lot of people think they have it, and they may. This was 78.6 back in the S&Ps. I'm still thinking that into perhaps month's end, and one of the reasons will be if we don't break down is that at the end of the quarter, a lot of money managers are going to want to show on their books what they own, the high performers, and actually NASDAQ, which made a new high, I actually think the NASDAQ 100 can make a new high. I don't think the S&Ps will, but I do think NASDAQ has a pretty good shot at doing it. Okay, we made a new high here. We're back to support. I think there's a shot for 73, 74. In fact, I'm going to use the NASDAQ when it's approaching those levels to key off of bearish positions that I'm going to take in equities through ETFs, possibly futures. So that's my view there. Maybe we get a dollar rally and one more push up in NASDAQ. Maybe the dollar, once it turns back down, might be more negative. I've been debating that myself for a while. Is a weak dollar better for the market? Helps our exporters, multinationals, or is a strong dollar, which is kind of deflationary, good for the market because of the Russell, which has really been leading the way up here. It's right behind NASDAQ. I was expecting it to fail from here. I caught this, and then I tried it again Friday, and we had a throw over here of this wedge line. I got out of the way, and now it's back inside the wedge line. So I may have been out of step because I was early. So we'll see what happens there. And I just wanted to show the yen, because if there is going to be another rally in S&Ps, I do think eventually the yen is going to 105. I'll show you why. Where are you? There you are. So this was a great short this week on a turnaround Tuesday. I know someone did it. Eventually, I'm looking for a third drive. Here's one, here's two, glaring divergence on the second. 105 would set up a third drive. I think there's a possibility, when you look at some of the short-term stuff, that we at least rally back towards 108.40 here. And what would really surprise people is if we got something like this from here and had one more rally. We never really got to the major resistance at 108, the breakdown of the channel on this bounce here. So it's like the dollar, it's an either or. You know, I'm a buyer down here. I'm a seller up here right now, kind of no man's land. So I don't trade every day. In fact, I believe less is more. And, you know, our late great Tom Petty said it best, the waiting is the hardest part. But I use the analogy that great surfers, when you see them out there on the break line, the great ones don't try and catch every wave. They're patient and they wait for the right setup. So I'm not sure what the batting order is today. Is Blake here, or is he on his way to Disneyland?
Oh no, I'm here.
Okay, here. We have a great guest today too. He's an author, Victor Riccardi. He wrote Behavioral Finance, and he's going to be talking about investor bias. I know I want to hear it because I'm usually biased, and he's also going to talk about guys that use financial planners or advisors, what to look out for that can affect the performance of your retirement account. So it's not going to be about a scalp, but it's going to be about your safer money, and hopefully everyone has that and they're not trading their whole net worth in the FX market. So stick around for Victor. How are you, Blake? So you're going to be leaving tomorrow?
No, I'm leaving today. I'm
okay.
out here today, but I'm sticking around for the first, well, basically the open, and I'll be leaving by the close. So,
okay. Well, help me nurture seeds of greed for the harvest of pips.
Well, first of all,
when ForexAnalytix is pretty good at.
You were telling me that you were getting up to harvest grains and giving your whole agricultural speech this morning. For me, it's just time to make the donuts. Now that I'm on your time schedule, do you remember the old commercial from it was like 1980s? Time to make the donuts. Maybe it was maybe the 90s.
What was it? Dunkin' Donuts?
I think it was Dunkin' Donuts. I'm pretty sure it was a Dunkin' Donuts commercial.
Okay. I think it's easier to make donuts than to raise a crop. What do you think, man?
I think it is too. I know how to make donuts too. I don't know if it's because I don't know. I don't know why I know how to make donuts, but I do know how to make them. All right. So hey, so today I'm talking about the dollar yen because I want to talk about risk appetite. And by the way, if you're listening in from the investing.com website, glad that you're here. We broadcast every morning, same bat time, same bat channel, every trading day, every day of the week, during the work week, trading week, I guess that's what we should call it. And you were talking about the equity markets, and for me, I'm very, very cued into what's happening in equities. If you watch the week ahead video that we post on YouTube,
and you called it live, Blake, Tuesday. You said that we could start to sell off from that 2,800 level. So
yeah,
great call.
Thank you. You know, it was, we had a false breakout, and we've been kind of coming down ever since. And this is really key support as far as the S&P goes, but I have to turn my attention to other things too to see how vulnerable the market is. So you have the S&P, okay, the S&P, I think, and we were just looking at your chart, and you had something that was drawn like this. I'll I'll quickly just, give you a rough drawing of what your chart looked like you had an ascending wedge. I see just a little bit more as far as the failure, previous highs, key trend line. That's not a 200-day moving average, it's a 200-period moving average on the 4-hour, but will be probably fairly important because it's just a confluence. But take a look at the Dow. So the Dow, this has been really critical support, and on Friday or over the weekend.
Relative weakness as
yeah,
well.
yeah. The Dow is showing relative weakness, and this is why you can see this little line I have here. That is from the low from yesterday, and basically, if we break through those lows, that's like, I look at the market like dominoes. If one falls, then the chances of the other ones falling at the same time are quite high. So the Dow, which happens to be one of the markets that's closest to breaking lower because it is underperforming, that's the risk. If that breaks, then I'm automatically going to look at the S&P. And if you look at let's go to the NASDAQ here. You go to the NASDAQ, you said I wouldn't be surprised if there was a new high in NASDAQ first. I wouldn't necessarily either. However, the NASDAQ looks a little weaker at this moment. Now, the reason why the NASDAQ's so on my radar right now, and I tweeted it yesterday, was that we hit, and that was on, the Pi, National Pi Day.
Yeah, that's right. You talked about it yesterday before. So
we almost hit the 161% extension since the .com pullback in the NASDAQ 100. Now that's huge. I don't know if we're going to get up there and actually test, because this is an ETN or CFD or whatever you want to call it, that this is tracking what a lot of Europeans and Asians will trade, in this case through FXCM, but it basically mimics the NASDAQ 100. So the numbers could be slightly off from what other people are looking at, especially when you look at a weekly basis. If you're looking at futures contracts or cash market NASDAQ composite, you're going to see a little bit different. But we're basically hit 161% extension and very divergent relative strength. So, for all intents and purposes, we may have already hit it. This may have been it. And that's why I'm watching this support. If the NASDAQ breaks the overnight lows, because in Asia, we did test the lows, okay? If we break those overnight lows and the Dow breaks down, then I'll be looking at the S&P. The Russell's, got this possible double top here. So I think there's some risk, Dale, with the equity markets. Now, I'm going to turn your attention really quick to the FX market, because if you look at this dollar yen, and this is one of the ways that I personally am going to really know if the stock market is coming down or not, is to get confirmation from the dollar yen. Now, the dollar yen slipped below the 106 level in Asian trade overnight. We are still below 106, okay? We are still below here. I don't know why that line's here. Let me get rid of it. And let me get rid of this. I have no idea what that's there. Okay, now you can see this upsloping trend line, this one right here, okay? We're basically on it, roughly, okay? We have this trend line right here, you see it? It is the broken trend line, and we're retesting it. So we have this confluence of trend lines that come in right at these lows, which is basically 105.80, roughly 105.75. We're only 20 pips away from there.
It's now or never for a breakdown or one more recovery, don't you think? Elvis saying that, it's now or never.
It's now or never.
Oh, you know it, but
yeah, and I can't sing it, not like you. But yes, if the dollar yen's going to bounce here, and now I'm not long, okay, and actually I've got one position on, and I can talk about that in a few minutes, and it's not even my idea, but I got one position on, which I'll talk about. It's not the dollar yen, but I would say if you want to, if you're like, okay, well, from a risk reward standpoint, I can get long the dollar yen right now and put my stops below 105, let's just say 75. You can put your stops at 105.70. You could, but again, the risk that I showed you with the S&P and the NASDAQ and all the other markets, those are at risk right now. Now, if we break down, you know, and you get stopped out, if you take a long here and you get stopped out, the good news is you know that you probably immediately need to reverse the position and go short and probably get short risk. And that's, for me, you know, and like I said, I'm not taking that position. It's not something that I find interesting at this point or worth my time because I'm about ready to leave. However, it is a possibility. Now, if the dollar yen does break those lows, my 2 cents would be that we are going to now take on the lows of in the equity markets across the board. So that's one thing that I'm looking at today, because let me also give you guys some fair warning. For those of you that have been around me, listen to my broadcasts for years and years and years, when I go out of town, call it luck, call it bad luck, call it whatever you want. For some reason, when I go out of town, volatility increases tremendously. Now you can play it, obviously, if you're like, oh God, Blake's going out of town, he's going on vacation, I'm going to buy volatility. You could do that, or just be really careful that, you know, risk appetite might start to slip. You know, I'm one of those guys that let me give you par for the course. So I didn't think Brexit was going to happen. I flew to Hawaii with my family. I was flying to Kauai, and by the time I landed, the pound did but it had just finished, like within 15 minutes, finishing a couple hundred pip drop, and yeah, that was Brexit. I spent the days following Brexit in Kauai, secretly getting up in the middle of the night when my kids were asleep, and my wife too, and trading the markets because I missed that whole dang move. But that's par for the course. That it happens all the time. If you guys have been listening for years and years and years, like I said, 15 years, market volatility is pretty synonymous with me going out of town or going on vacation. So that's why I'm just letting you guys know. But the volatility could increase, stocks could come down. That tends to be the big price swings tend to happen when I'm gone. And based on now, why is that extremely possible this week? If you guys have looked at the volatility, I should say volatility is probably not the right word, but if you look at the very tight consolidations that we've seen in currencies this week, I wouldn't be surprised if we get a big move in the next couple of days. Bottom line, the market has been very subdued. We've had very little movements. If you look at the ForexAnalytix, the overview page, the traffic light page, our support and resistance levels, usually just the first level, first tier is getting taken out, whether it's support or resistance, and that's pretty much it for the day. It's been very subdued volatility, so volatility could really pick up here going into this the end of the week, just because the market's been so quiet. Now, I mentioned I'm in one position, and it's not even my idea, but I'm going to tell you guys what I'm doing. I'm short the Aussie Canadian. Now, my office is in Greenwich, Connecticut, and even though I trade out of Scottsdale, Arizona, I work with Gelos Capital. The Mr. Gelos, he's also known as FX Macro on Twitter, for those of you that don't know who he is. He's bullish the Canadian and bearish the Aussie based on trade. And I looked at the Aussie Canadian pair on Friday, on Monday, and I said, you know what? We're moving into a multi-year trend line here, and we're pushing right into some resistance, and we had a really nice pop for no reason on Monday, and I'm like, and so it was actually Tuesday I looked at it, and I took a position yesterday because I'm like, this is pushing right into resistance, very overbought, and the risk is manageable from here. And if we push forward with these tariffs, it's going to be the tariffs are going to affect more of China, which in essence your proxy would be the Aussie, and it'll end up being better for the Canadian as NAFTA talks progress and we exclude Mexico and Canada. So the natural trade would be short Aussie Canadian, and the trade makes sense on a macro level, and on a technical level the risk reward is there. So I am short the Aussie Canadian as of yesterday, and we had a nice little pin bar here, and now you're seeing that reversal follow through. And also keep in mind, just last week, I mean, the pair had gone from basically parity to 102.50 in 3 days. I mean, that was a pretty big move for what? We don't understand why, and I don't understand why, but I can tell you from a technical standpoint, it looks like a good place to take a shot at it. And I know where I'm wrong, and that's the key to any trade that you do, Dale, or anybody out there, is you're going to have good trades, you're going to have bad trades. The other day I was short the dollar Canadian. Oh, and the reason why we rallied so sharply here on Monday was because of Pola's. Okay, Pola's comments Monday, Tuesday. That's why we spiked up into here. But and I was short the dollar Canadian as it went through, as the dollar Canadian rallied, and I took a loss, and we talked about it a couple of days ago. You can go back and listen to the recording if you'd like. And I got run over by the Canadian. But as a trader, all we can do is identify possibilities and know where our risk is. And as long as our risk doesn't outpace our reward, and our reward can outpace our risk by a 2-to-1 or 3-to-1 or 5-to-1 margin, then that's the trade that I want to take. And so if I look at the Aussie Canadian, I know my risk is above 103. Period. End of story. Above 103, I'm wrong. Okay, but if it's trading at 102 and your risk is above 103 and your reward could be back down here at 97, 98, 99 cents, you have a 1-to-3, 1-to-4 risk reward ratio, and that I'm willing to take any day of the week, and especially if I can have a good theme behind it or reasoning of doing that trade, and this is a really good, for me, macro reason to be short the Aussie Canadian. So anyway, just giving you guys some ideas as far as things to do, especially when you look at the dollar, and the dollar is not so clear right now, right? If you look at the dollar, let's go to the dollar index. The dollar index, I mean, it's clearly bearish, but if you look at what's happened over the last month and a half, it's not so clear, right? Like the trend is down, and we rejected 91 cents last week, but in all actuality, what is there to do with the dollar at this very moment in time? It's a very tight trading range. I have to let the dollar show its hand rather than me make the assumption I know exactly where it's going. So just some ideas there, and hopefully that all made sense to you guys. I am going to be passing it over to my colleague Steve Volge here in just a moment, but let me see if I can answer a couple of questions really quick. Forex Gal said it was a Dunkin' Donuts, 1984. Just Googled it. That was a 1984 commercial, Dale.
Yeah.
Wow, I thought it was like 1990 or something, but I remember it vividly. Yeah. I remember the old couple older. I would say that I'm like the old couple now, but back then I
Isn't
thought
that
they were
funny how that happens?
Yeah, it is. It's funny. I guess back in '84, I'm like, oh, those old people, they were probably like 30, you know. But it was like a sleepy couple, I think, walking down the stairs. Time to make the donuts. It was pretty funny. Anyway, Prasad says, sorry, we are unable to see the screen. Are you guys sharing? You guys should be able to see my screen. And you should, if for some reason, if you're logged in and you can't not see the screen, it's a Citrix issue. That means you probably need to log out and log right back in, and you should be able to see our screen. You should be able to see the dollar index daily chart right now. And Prasad looks like he is logging out and logging back in. All right, Dale. Well, with that being said, I'm going to pass it back over to you guys, and Steve should be here. Good morning, Steve.
Hey, Blake.
How you doing?
My friend? I'm good.
Hi,
hey,
Steve.
So did we get a bunch of people taking advantage of the contest that we held?
Absolutely.
Great. I saw there were hundreds and hundreds of entrants, so it's pretty exciting, guys. You guys have I know it's over now. Well, the deadline's over, but for those of you that entered, you know, you got a chance of winning some ForexAnalytix shirts and gear. And I'm going to tell you that I gave one of my ForexAnalytix shirts to a friend of mine a couple weeks back. He was like, this is the most comfortable shirt hands down I've ever had. He had to actually get in touch with my distributor to go, he wanted to get some himself. He was like, so impressed.
I concur. I wear them all the time, man.
I do too.
Same here.
I'm like a walking billboard, and not because I should be. It's just these shirts are so dang comfortable. I'm going to be wearing mine at Disneyland because I'm actually washing my 3 shirts so I can take them all to Disneyland while I'm there because they're so comfortable.
I've worn the same one for 4 days once.
That's gross. All right. That's gross. All right, guys. Hey, I'm going to, Steve, you got the screen. You guys have a good one.
Blake?
And yeah, have a great couple of days. Yes.
Yeah, have a great time, Blake.
By the way, just wanted to tell you, we had a look at the Aussie CAD last week, and it's at a very interesting position indeed. But
yeah, just connect the highs, Steve. That blue line that you have there on the New Zealand Canadian, I forgot to mention that. Just connect those tops.
Know I was looking at that as a channel, but that's what I want to say. If you do it like that, we have a triple confluence of resistances here at the Kiwi CAD as well, which is so something I wanted to mention.
Yeah, if you want to, it's the thing is the Aussie New Zealand is still pretty weak, so I don't know which is the better play, but both of them have a decent setup.
Yep, both of them indeed.
All right, guys. Hey, good luck the next couple of days, and I'll be thinking of you in Mickey Mouse Land. So you guys have a great one, and thanks everybody for being here today.
Remember what I said about the Pirates of the Caribbean.
Yeah, no beer drinking on the Pirates of the Caribbean. Got it. All right. Thanks, Dale.
What about some live broadcasting from Disneyland?
No, hell no. No, that place is a zoo as it is. No way.
Well, you know what? FX is financial Disneyland in my view. There's so many different rides to take here, Steve. I'm curious what you bought tickets for today.
That's a good point. That's a good point, Dale. Thank you, Blake. Okay. Obviously, Blake already mentioned it. FX remains extremely subdued. We've had a very quiet week. We have a few developments here. For example, the Aussie, we said it yesterday that it might be breaking out, but we definitely need to wait for the end of the day. It got rejected from 79 once again. Today is pushing lower. So, we obviously, since yesterday was a false break higher, I even canceled my order to enter long because I had an order to enter long. It didn't get triggered yesterday. And, the kind of rejection we had for a second day in a row, made me question that it's actually ready to move higher. So I even canceled my entry order earlier today. And, as long as this area is holding, there is the possibility of either pushing lower a little bit towards the 78.30 area and then catching a bid, in which case that's going to be a bullish development, or showing more weakness, which I'll have to go down at a lower time frame to determine what's happening. In which case another move towards the 77.40 area will be likely.
Yen has a hard.
Kiwi also got rejected from soft resistance. I repeat, this is a soft area of resistance, and remains more or less in the middle of the range, so nothing much to do here. Now, having to do with the rest of the, let's call the main pairs we're looking at, USD CAD is retesting once again the highs towards 130. I don't know, but it looks to me like I said it yesterday as well. It looks to me that it does want to move higher. I think that a move towards the 130, 130 area would be nice. I have an order to go short there. On the other hand, the USD NOK, as you see, is confirming that it's one of the strongest. The NOK is confirming that it's one of the strongest currencies against the USD. It has broken below this triangle, and it seems to be on its way to new lows. So I think that's one of the best opportunities to be long against the dollar. We've said it several days ago, and it's still true. Euro USD and the cable, absolutely nothing to see here. They are moving a little bit lower today, but I mean, the structure, the manner they're doing that is definitely not pointing to an impulsive move to the downside, more or less of a little consolidation. So nothing has changed there as well. Obviously, USD yen, we said it yesterday, and today, it's even more true. This inability that it has to actually rebound higher for at least a retest of this trend line is a very critical sign that it's much weaker than many people expect. And in all honesty, if it breaks below this zone, there is a huge pocket of air until we reach the 102.70 area, and it looks like to me that it wants to do that. Obviously, the risk appetite is going to play a big role in that. Blake already showed, I had shown it yesterday as well, that the Dow Jones, we had said that it's definitely the weaker sister here. It was already in a confirmed triangle. It's currently, yesterday tested like some soft area of support. I'm also watching this previous ascending channel resistance as a possible area of support. For sure, if we break below the previous low somewhere at the 24,200 area, it's going to be some kind of a confirmation that we're moving lower. The SPX also found a short-term high, but we definitely need more confirmation that that's not like a temporary pullback. Perhaps it's also within a triangle, in which case, moving lower from here, I mean, there's a lot of space to move lower from here, as long as the 78.6 fib is capping at 28.03. I think that it's prudent not to be too bullish. Nasdaq still looks much better than anything else. It seems to be retesting the previous all-time high, and we need to see if it's actually going to manage to hold that, because if it breaks below here, I bet that a lot of market participants will start getting worried that perhaps that was a false break higher. VIX caught a little bit of a beat yesterday, but in general, we have to admit that it has been several days now that it's deflating from the 50+ level to lower levels. But as I've said, I'm really hesitant, and I'm completely unconvinced that this market is ready or has the ability to go back to being, in the environment we had for several months last year, like very low volatility, very low volumes, slow grind higher. I believe that the move we saw at the end of January is a first warning sign that this is going to be a much more volatile year, and this is something we have to keep in mind. Now, let me finish by looking at the DAX, which can also be in a triangle above this critical trend line support and below this trend line resistance. More or less the same situation with the FTSE. You can see here that this is possibly a triangle. Most likely, if this confirms to be the technical formation we're looking at here, then we should expect that a move to the downside is more likely than not. Let me see what else I wanted to talk about. Yeah, crude, by the way. Let's have a look at some of the commodities and metals. Crude has also quieted down quite a lot. I mean, this is likely a triangle or some kind of a consolidation. As long as we're holding this ascending channel's resistance that might act as support, it has acted several times in the past. I think that, we have to keep in mind that there is a scenario that we're going to move straight higher from here. Otherwise, if we actually manage to break below this trend line, then the alternative scenario, which is for a push, which would be looking for a push towards the 55 area before then moving higher once again, gets triggered. But we don't yet have enough confirmation to favor one of the over the other. So, I'm just putting the data here. I mean, nothing has changed. Same thing with gold. Gold is still trading within a choppy, like wide triangle. Same thing with silver. Actually, silver even more. If you see, it's in a very, very tight formation. So, silver also needs to make some kind of a move for us to get some kind of a direction in a market that in general has remained without a direction since a long time ago. Obviously, the more we stay here without doing anything, the less the chances that this is going to be an inverted head and shoulders formation, because symmetry will have completely been lost. And let's have a look at palladium. We had a friend here yesterday worrying that perhaps the fact that palladium was breaking above 1,000 meant that it's not bearish anymore. As you see, it didn't even manage to close above 1,000. So I still favor the scenario that palladium might have one more push lower towards the 900, 910 level. So, that concludes a fast overview with some of the metals. We already had a look at the Aussie CAD and the Kiwi CAD, which, we don't like very often look at. And let me have a look at the questions. But we'll get more ideas about what people want to see from there. USD SEK could be bottoming in correction of uptrend. So up, there's a question about that. Let's see. I showed you USD SEK a couple of days ago, actually, on the chat room, specifically saying that, one scenario that points to Euro USD strengthening, to Euro USD weakening, is the fact that USD SEK seems to be in a bull flag. And, this still remains the case here. So it's likely that the next move is going to be to the upside as long as we see this move manifest rather soon. And I say rather soon because if this is to be a bull flag to the prior move higher, it should be breaking out quite soon, because then we will lose, the symmetry we would like to have between the flag and the pole of the flag, right? So regardless, this still looks like a little corrective move here. I think that a break above, let's call it 827, 828 is going to confirm that another move to the upside has begun for the USD SEK, in which case I would be looking towards the 852 area and the previous high that you see here. So if you zoom out, I'm not really sure that the USD SEK doesn't have more downside. Actually, I would favor in the longer term more downside, but in the short term, it looks like the chances of another move to the upside towards this area are significant. Okay, so if I had to bet just by looking at the technical picture, I would say short term likely higher, but I'm seriously not convinced that this also depicts the intentions of the pair for the near and medium term. Okay, because I do think that, for example, if we get rejected once again from there, the chances even of breaking lower from the recent lows are quite high. So I wouldn't take it as far as you mentioned, like that it's in a big bottoming pattern and it's about to move quite higher. But I will agree that the next short-term move has very good chances of being to the upside. Dale, I have a question for you here from KT. He says, good morning, Dale. For some of us who do not know what this 3 drive is, can you please explain?
Let me ask KT, are you a subscriber at ForexAnalytix, or do you know him, Steve?
These are just acronyms, so I have no idea.
KT, if you can hear me, are you a subscriber?
Yes, he's a subscriber.
He is a subscriber. Okay. Well, you know, I can give him my Skype ID and I could show him there, unless you want me to just do a brief one here. Now.
It's 100% up to you, Dale. Up to you, mate. Honestly, 100%. 100% up to you. I'm fine with either. Whatever makes you feel better.
You still have some more markets to talk about, and then we have an interview.
Yeah, but don't worry about it because the market is quiet anyhow the past couple of days, so it's not like we have some major developments that I haven't covered. That's why I'm asking whatever you want.
Okay. Well, let me just show one potential one, and then if you want
absolutely
pulling in it, you know, it's hard to teach in 5 minutes, and I'll give them my Skype. But,
okay, so write to him your Skype so you can, yeah, absolutely.
All right, but let me show the whole group here. I'll take the screen back for just a second.
By the way, Dale, Andy says, Dale, do it in the chat room, he says. Another subscriber.
Oh, okay. I'm going to show you one, okay? And here, I'm going to show you this. I don't think it's going to happen. I started talking about it. Here was an example at the highs. You had 1, you had 2. Usually the first one confirms highs, then the second drive doesn't. I look at different readings. My ideal reversals are when the reading's under 70, which at this high on Tuesday, turnaround Tuesday, it was a 1, 2, 3. And if you want to look at it longer term, you're going to be looking at the end. This is pretty classic. Here's drive 1, KT and Andy. Everyone see that? That's a confirmed low. So I teach that confirmed lows usually are not the low. They're just a low. So you got a low and a bounce. Then we have the break to here. Steve shows this non-confirmation here as well. This would be drive 2. At drive 2s, I tell people it's not a reason to reverse, but it's a reason to be careful about being short. Had another bounce, and even though I think there's a possibility for another shot up here, I'm looking for a third drive around 105. I know a lot of people are looking for 102. That would happen if we get a throwover, but if we trade down here against this line, this would be a third drive. You're going to want to see the RSI. I'm looking at the daily, hold above 30, and then you have a potential 3 drive to a bottom. Does that help?
Yeah, so bottom line, 3 drive pattern is a triple divergence, either
it's of double divergence, but 3 legs to a high and to a low.
You're right. It's like exactly double divergence in essence, because we're talking about three peaks, one higher than the next, with double divergence, the second and the third diverging even further from each other, or the exact opposite, having to do with bearish markets. You have a low, then you have a lower low with a first divergence in the RSI, and then you have a lower low with a second divergence in the RSI. So bottom line, that's a 3 drive pattern. It depends on if it's in an uptrend or it's in a downtrend. Yeah.
So that's it. There are certain parameters that are better for looking for reversals. You should have, when you're trading a 3 drive to a bottom, an RSI reading above 30. and for 3 drives to a top, kind of like this one up here, you want to have RSIs under 70. Okay, so 70 and 30 are your preferred setups. If you start getting readings, even though you're diverging in the 20s, there's just too much downside momentum and the probability of that formation working is lower. Same if you have a real strong market and you see RSI readings in the 80s, mid 80s, and then you get your second one and it's, 78, and then your third one is 75. It's still a formation and form, but it's not as probable because there's just too much momentum for me to trust it. So a lot of it's intuition as well. And just like everything else, you're better off doing it with the trend instead of against the trend. But you get in both, you get both counter trend and sometimes moves terminate with these formations as well. In fact, a lot of these in Elliott wave terms, Steve, if I'm correct, they end up being ending diagonals as well.
Yes, you're absolutely right. They most of the times end up being ending diagonals. Exactly, because that's how an ending diagonal works as well. I mean, the market keeps producing higher highs or lower lows if it's in a downtrend, but reluctantly and with clear momentum loss. So this is exactly what it is.
Okay, I hope that helped. I'll just post my email if people want to get into more detail with it. And I want people that have an interest in it to be ForexAnalytix subscribers before I'd accept them into my little Skype group I have. Okay, Steve?
Okay, coach. Okay, I'm taking the screen back then, and we can have a look at a few more markets. Thank you very much.
You're welcome. You're welcome.
Okay. So a few cross rates that I wanted us to have a look at. One of them is the Euro NOK, because the Euro NOK has clearly confirmed that it has entered a corrective move. Perhaps it's just an ABC or whatever. Perhaps this ends up being a channeled move, but definitely, as you see, the Euro has gone in a period of lagging underperformance against the NOK. Keep in mind, though, that if you look at the big picture, this has been a clearly well-defined uptrend. So in order for us to get convinced that, this is something more than another correction on an uptrend, there is a lot of room to move to the downside, as you see, right? Because this is the uptrend's trend line in essence. And, there is a lot of room until then. And, I will keep an eye on this channel. Perhaps a move towards 940 is going to be a good buying opportunity. Otherwise, if this ends up being, instead of an ABC, something stronger, we should know very, very soon, because that means that we will have already entered the wave 3, which means that we should start seeing an acceleration to the downside. So I'm really looking forward to it, but because I have to tell you that although I haven't jumped the gun, and I don't like to jump the gun in so confirmed uptrends, my macro bias tells me that I want to be long the NOK against the Euro. So in essence, I want to be short this cross, but I still don't have the confirmation that something has substantially changed, from a technical standpoint. Now, another interesting pair at the moment is the Euro MXN, because as you see, this is a very well-defined triangle, which means that I expect that there are high chances for a break to the upside and a continuation higher. Obviously, we're going to need like a daily close, let's call it above 23.36 to confirm. Okay, but keep that in mind. I think this is definitely a bullish consolidation. I will be surprised if it actually ends up breaking to the upside, to the downside, because I strongly favor in such a formation a break to the upside for at least one more push, to the highs. So you know, that's another thing I wanted to show, since, as I said, in the main currency pairs haven't really done much since yesterday that we had a look at them once again. Let me see what else. Let's have another look at copper and then at the DXY. Copper is still consolidating within what is likely a corrective formation. Nothing to see here. At some point, I think that a break to the upside is quite likely. And let's have a look at the treasuries and the bonds, because we haven't done so in some time. So the bond, as you see here, is still correcting higher in what is likely an ascending channel. I do think that this move is corrective in nature. I have absolutely no reason to believe that it's impulsive, which means that I will be looking for some fib resistance. For example, we are approaching now the 38.2 at 160.60. If I see a reaction from there, I'm going to start getting interested. If we break above there, I'm going to be looking for the 50% fib, then for the 61.8. But in general, what I want to say here is that I'm monitoring this ascending channel. I'm monitoring the fib levels. I will also want to see a rejection with the RSI staying below 70. And, you know, if all that happens as expected, I will be looking to be short the bond once again. So this is one potential trade in my radar that I'm monitoring. Also, let me remind here what we said many days ago. The treasuries are also in a recovery, but this recovery is extremely weak. There is absolutely no upside momentum. So I have absolutely no reason to believe that this is simply not a very weak corrective move. It's also channeled, but as you see, this channel has much lower inclination than the one in the bonds. The RSI has worked off the oversold conditions. So I do believe that the treasuries more or less are getting ready to do the next move to the downside as well. So I think that these two markets are, you know, obviously leading. The bond market is always leading FX, and FX also leading, you know, stocks. So, you know, it's always one of the first things I check when I wake up in the morning, and I check them a couple of times, you know, during the day. And I always trade keeping in mind what the main benchmark bonds are doing. Let me see if there is anything else. Let's have a look at the USD/MXN, by the way, as well. One possible interpretation of what the USD/MXN was doing is that this was a triangle, this was a pennant that was broken to the downside. We seem to be moving higher. So, you know, this will prove if that was indeed the formation, because it might act as resistance here, or we're talking about some other kind of corrective formation. Regardless, as long as this area is holding the, let's call it 1898 area, I favor continuation to the downside here as well. Okay. Let me see if we have more questions. Any more thoughts on pound CAD? Let's see. By the way, who do we have for an interview today, Dale?
We have Victor Riccardi. He's an author of behavioral finance, and he's be talking about investor biases. And, you know, we all have them, right? And I'm going to be interested in that. And he's also done studies on how, you know, people's certified financial planners and advisors, what to look for, because some of them can have a negative effect. Obviously, you know, if they're just salesmen, they're not going to know, you know, what to do, you know, unless all ships are rising. You know, it's easy to be an advisor during the bull market, right?
Of course. Buy that, buy that, buy that. Yeah, exactly.
Yeah. There used to be a commercial called The Unknown Broker. In fact, that's what I was trying to do on Halloween when I couldn't get my webcam to work. He wore a paper bag over his head like the unknown comic from the Gong Show. And he had a bunch of phones in front of him, and it would show him picking up the phone. Sounds good, let's do it. Sounds good, let's do it. Sounds good, let's do it. Everything sounds everything, because he makes a commission every time he does a trade. So
Of course.
why he's not gonna say no, don't do it. I don't want to earn a commission today.
The only way he might say no, don't do it is if he has something alternative to offer. So you know he's still going to get a commission, but
then he'd get a higher, a bigger load, like a 4% load.
By the way, speaking of 3 drives, and we had a question about the pound CAD. I already showed yesterday that the pound CAD is currently, obviously, first of all, it's in an uptrend since it created this inverted head and shoulders formation. I had traded that when it actually broke up above there in the beginning of 2017. But it's currently testing like a quite important resistance area. And this might actually be a 3 drive. What do you think, Dale?
Let me look. That's a daily? Could be.
Yeah, one high here above 70 RSI.
Kind of stretched out. I like them a little tighter. To me, it looks like.
Yeah, I know what you mean. But still, as you see, we do have RSI that is still diverging as we're currently testing resistance. The only thing I don't like here, although it's very early in the day, so we can't really take into account what today's Dale candle is, because by the end of the day it can change completely. Yesterday we had a spinning top. Spinning top shows us actually more of a hanging man, but regardless, it's a pin bar, which shows more or less market indecision. So far today we have another one of those. You know, if we get 2-3 days in a row of consolidation, then it's going to look like mostly like a little consolidation before another push to the upside. Now, if after the hanging man we got yesterday, we get a nice reversal today and we get a push lower, I will start getting more confident that perhaps, because don't forget that whenever you're trying to catch a top or a bottom in what is a well-confirmed move higher, because since September, the pound CAD is comfortably moving higher. Obviously, trying to catch a high or a low is a low probability game. There's no question about it. I'm just telling you that this is a nice area of resistance that can potentially,
And you know what's interesting, Steve, on that chart? The highs in May were confirmed. So that told me, even though it went all the way to retest lows, that wasn't going to be the high.
And that's exactly what happened.
Yeah. So, but this time we're not confirming. It's actually diverging against the last major top. So that's a pretty good look there.
Yeah. So, I would be careful here. In essence, if you are long the pound CAD, I'm not telling you to, close out your position, because, there's still no confirmation that it might like pull back from here. But for example, if it was me, I would definitely have taken some profits exactly here, right? So let's say 50% profits exactly here. And, I would be looking to reload lower, because let's be honest, it has a good chance of finding then support in this ascending trend line. Also the 50 DMA is there. So somewhere in 175, it's a very nice, interesting area for somebody to want to participate to the upside, respecting, the previous trend. But I would be cautious up here, right? I would be cautious. It's already an extended market. It's already producing divergences. So I would at least be very cautious. And there is definitely no reward to risk ratio to be buying here, because I'm not telling you that you cannot make money by buying here, but the question is, what are you going to be risking to be buying here? So is it a trade that is actually going to be worth it, in a sense, if you repeat the same kind of trading 100 times, will you end up being positive or negative at the end of the day? I have a little bit of a doubt that buying up here makes any sense. So, that's my point of view in the pound CAD. Hi, Steve. All CAD crosses looking weak. The CAD, yeah, I agree with you, Martin. I agree with you. CAD does still look weak, and I even favor actually USD CAD resuming to the upside, as I've said, for at least one more push higher. Now, there's a question about EuroCAD. EuroCAD, since you mentioned it, as you're going to see here, also is showing some signs of rolling over, it gave us 2 strong days lower, then 2 strong days higher. Now it has stalled again near the highs. I'm also monitoring this this ascending trend line here, and I'm also seeing some divergence. So obviously EuroCAD, remains in an uptrend, but as we said with PoundCAD, this does not look the place to be buying, right? Where would you put your stop loss? So for example, the last time we had this conversation about EuroCAD, it was here. Let me show you. It was exactly here. I don't remember who was, perhaps Abdul was it that had asked about it. It was exactly here. And I said the same thing here. I said like, okay, it's in an uptrend, but let's say you go long, where would you put your stop loss? And what would your target be? And you see that after moving a little bit higher for a few days, then we dumped lower there. And, at least it's in a period of consolidation now. Now, if it ends up doing something like this, then it can perhaps work the overbought conditions through time instead of price. Then I will feel more comfortable of telling you, okay, let's say, for example, that this ends up creating some kind of a triangle here, right? Then I will feel more comfortable to tell you that, okay, now we have a better idea, let's say, of what EuroCAD wants to do. It just wanted to work out the overbought conditions over time. We now have, let's say, a nice triangle. So I'm favoring, like the Euro MXN that I showed you. So I'm favoring a continuation to the upside. Then I will feel more comfortable. Why? Because then you will also have a well-defined risk-reward ratio. Because if we have created a triangle, let's say, then you will be able to place your stop loss above the last, below the last low of the triangle, and then look for a thrust higher. But at this point, we're still early in this choppy consolidation. So the only thing I have to advise is be more patient. Okay. I don't want to bleed in your interview, Dale. Is your guest here? Because we're already two minutes past the hour.
Okay, Steve. Thank you very much.
My pleasure.
Okay, buddy. Thank you, Stel. Thank you, Blake. Hello, Victor. Hi, Victor. Thank you so much for joining us. I'm going to make you a panelist because I'm not sure you're going to have any slides or charts to show. Just a guess. I could always change it. But I'm making you a panelist. And then I'm going to take control of the screen so I could show your books. Looking forward to hearing your voice. You have to unmute yourself, Victor.
No. When people call through the phone, you have to unmute them yourself. I already did so. So we should be able to hear him now.
Hi, Victor.
Okay, great. Okay, how are you doing?
Hi, Victor. It's great to meet you. Thank you for taking the time to address our community today.
Oh, no problem. I'm always glad to talk about behavioral finance.
Okay, and let me ask you this. How did you end up with this profession? You want to tell us a little bit about your journey and how you ended up at point B, what point A to B was like for you?
Sure. I actually started off very much as an accountant, very classical decision-making, rational, because that's all I was ever taught. Then during my graduate studies in the late 1990s, about 1998, 1999, my mentor introduced Hank Purden. He was an expert in technical analysis. He introduced me to behavioral finance. And at the time, I had started in the mid-90s. I was trading. I was making a lot of money. And then about 2 years into learning behavioral finance, the dot-com bubble burst, and I realized I was making all these emotional decisions. I lost a lot of money in margin. I lost a lot of money in trading. And essentially, I realized that emotion and overconfidence and all the things I was reading about in the academic literature were what I was living. And it was, for me, it was really, I got a new religion. So the last 20 years have been a wonderful journey because I learned my lessons. I've learned to invest for the long term. I trade occasionally, but only a very small portion of my portfolio. But my whole premise is to just try to buy low and sell high and make a profit and have a wonderful retirement.
Okay, so it's been pretty easy doing that during this prolific bull market, and I'm not saying that the bull market is over, but it has definitely become more binary since February. So let me ask you about what one of your writings, and your writings are about investor biases. Was that also a problem for you into the dot-com bust, is you only knew how to be bullish and that was your bias? Because my favorite maxim from everyone I've read and through my journey myself is, if you don't learn how to change your mind, you won't have any change left. W.D. Gann. So tell us about biases. And I admit I come into the market with biases. I need evidence, like an attorney, to justify my bias to assume risk. But I do have biases. Are you saying that people should not have biases?
Oh, I think all of us have biases. I think it's just understanding what biases we have and then putting in a non-emotional trading strategy or investment strategy, so we learn not to be triggered by those biases. So, for example, I would say three or four major biases in behavioral finance is, one is we tend to be overconfident. So many times we think we're experts. We have an illusion of control related to that, so we then trade too much. We let it rise, and we essentially don't use a trading strategy, and that many times we fail then to recognize when the market has turned to a bear market. So that's one major bias. We tend to suffer from loss aversion / what's known as the disposition effect. So the loss aversion is on the downside. An emotional loss feels far greater than an equivalent loss on the upside. And then tied to that is what's known as the disposition effect, in which we sell losers too early.
Okay.
We hold on to losers too long, and we sell winners too early. And I think many of us will still suffer from that, and then we suffer from regret, because then if the stock goes up, we feel like we lost money, but then if we kept on holding on to it, and we lost even more money, then we also suffer from regret from that perspective as well.
Okay, so I call that getting out too early, first daylight syndrome, because people are so used to things not working for them. When they work, they don't ride it to objectives. It's something that I have trouble doing, and what I've learned to do is to take partial profits. So I'm banking something, but holding on to a core position. And you talk about regret. When you hold on to losing positions, hoping one day they'll break even. What do you think of this expression, Victor? Hope is the oxygen in our life, but the carbon monoxide in our investing.
I think exactly that's true, because there's research, for example, that if you sell a loser, you regret initially purchasing the stock, and you're less likely to repurchase it. If you sell a winner and it declines in price, we feel happy, and we're more likely to repurchase the stock. Versus if we have a winner and the price increases and we sold it, we regret selling too soon, and we're less likely to repurchase. So in two scenarios, if you lost money on something, or if you sold it and it went up in price, then we're less likely to get back in the stock. So that's an investment strategy, but there's also a trading strategy that impacts us related to that disposition effect.
Well, let me ask you this: in your studies, and I agree, you feel the opportunity loss because you're out. I try and teach people there's always another trade, and next is a real good word to have next to your trading platform instead of dwelling on anything. A win or a loser. An NFL quarterback doesn't come into the huddle and say, "Man, I suck, I threw an interception." He's calling the next play, right? So
exactly.
So let me ask you this: when I think it's even more difficult, and I'm curious as to what you found out, and only pros, really seasoned pros, can do this, is after you've taken a loss in an instrument, I don't care what it was, IBM, Bitcoin, cattle, whatever, that it's very difficult for people to commit to that same trade again, even though maybe their timing was off a little bit. I call it being right the market, wrong the trade, and they got shaken out. Do you find that that's a very difficult thing for people to do? And then what they'll do is they'll move around, they'll blame the instrument or the market and say, oh, I got burned in the euro. So, you know, the euro didn't burn them. It was their methodology and their psychology that created the problem. So is it even harder to get back into a position, the same position, after you've taken a loss, as it is to get back into a position after you've had a gain and it kept going?
I think, yeah, well, I think in both cases, there's essentially what's also known as the anchor bias, because you're anchoring on that last trade, but also the regular standard finance school rationalists would say there tends to be if you look at historical return, risk return, there's a positive relationship. Well, my research also looks at perception, which is the emotion of looking at risk in the future or the perception of the instrument. So if you had a negative experience with a certain type of instrument, you view it as you perceive it as more high risk and an inverse relationship in which it's going to give you a lower return, versus if you have a positive outlook on something, or even a stock, suffer also from what's known as familiarity bias. If you're highly familiar with a certain asset and you made money from it, you're more likely to perceive that as less risky and providing you a higher return. So that's the other tie-in, is there's not always a positive relationship between risk and return. There can also be an inverse relationship depending on how we look at risk, and especially in terms of perception versus historical risk.
Okay, so we've identified a lot of problems, and you know, you definitely, your work verifies my little statement that just like real estate is location, 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 investing or trading is psychology, psychology, psychology. So you've listed these mindsets that people fall into. How do you teach people to overcome these things?
I guess one is, and it depends on your particular background, your particular training, but so I do a lot with financial advisors, teaching them to essentially be a financial coach. So that's one avenue in which you look for different ways or outcomes not to repeat the same mistakes. You know, either write things down. I mean, it sounds very simplistic, but
journaling,
keeping a journal, writing things down, having an investment strategy, thinking about the big picture, and figuring out what biases has triggered you to make bad decisions in the past, and try to have a way to assess those biases going forward so you don't fall into the same mental mistakes in the future.
Okay, so you're a big believer in the journaling, which NLP people would say it has much more impact for you to write a thought down, or, you know, write about a position you put in, all the whys you did it, the contingencies, and then it makes a bigger impression on you when you look back at it because you've written it down instead of just had it in your mind. Is that correct?
Exactly. I'm even getting into an area called financial therapy, which if we really continually make bad mistakes, it's more related to maybe even a childhood experience or even bad negative flashbacks in which you suffer from even deeper psychological issues.
Okay, let me get on my couch right now, Victor.
Sure.
And
exactly.
So I mean, in a way, you're a trading psychiatrist, and I can relate. Any meds that we could take that might help us out, like lithium to stabilize us if we're, you know, kind of schizophrenic about being bullish and bearish 10 times within the same 24-hour time frame, or
well, I think even just basic things is, you know, when you have those times when you make good decisions, think about your internal and external environment. Especially having a positive attitude, but But even if a financial news network has really negative news in the morning, that infects our mood subconsciously, it shows. And actually, if you run two experiments and one person was going to purchase something, if one group saw a negative commercial or a negative story and the other group didn't, our subconscious even plays a greater impact in our minds, where the people who saw the negative commercial or the negative news are more likely to become even more risk-taking and make more bad decisions and pay higher prices. So we're very complex creatures, is my other lesson I've learned.
Okay, and how about position size? I know that in spec investments, the upper 10% of people's pyramids, especially in the FX arena, they used to offer, I don't know, 500 to 1 leverage, and people would over leverage. People in the stock market that maybe use margin and are worried at night, I believe trade small and grind it out rather than trying for the big winning trade. You never know which trade is going to turn into the big winning trade. Do you talk about position sizing and trading small and trying to just, be conservative? I mean, most hedge fund guys do cartwheels doing 25% a year, and there's a lot of hype on the internet of returns that are, 3 figures and better. Do you talk about that, address that, that people should start small? I recommend, I even wrote a song, use less leverage. What's your belief in leverage?
Well, exactly. I believe at this point, I believe in keeping, since I mentioned previously, a little early in this interview, that in the 1990s, I traded on margin and I took a bath at times. And so what I realize now is, because I have a tendency to keep on letting it ride, especially if I'm using margin, I no longer use margin, so I tend to avoid leverage. So what I essentially do is I guess I view it as a bucket approach. I have 90 to 95% of my retirement money in my company plan. I can't touch it. It's mainly in mutual funds. And then my trading money, or what I consider the play money, or the money I can lose that's not going to impact my wealth, is essentially my IRA money. And I use my IRA money to trade. And also, because it's an IRA account, it doesn't allow me to use things like margin, but also I don't have to deal with the capital gains when I do make a nice money on a trade. But also, if I make a nice profit within that IRA account, in order for myself not to keep on letting it ride, so say if I had $20,000, I turn that to 30. I take half of my gains, say $5,000, and I then take that $5,000 off the table within my IRA account, and I put that into mutual funds. So then I always have maybe $25,000 I'm trading with, but when I do make money, rather than keep on letting it ride, I'm taking part of the profits and switching that into another bucket within that account.
Yeah, so you diversify. So a great strategy, even if you are a good investor and trader, is to diversify away from yourself.
Exactly, because at some point the market does turn, and rather than be a week or two blip in the bull market, as you were pointing out earlier, at some point we are going to have a bear market, and it's very difficult to recognize a correction versus a bear market. So once you start having that 6 to 12 month extended period of a bear market, especially probably many of your listeners haven't experienced a bear market before, if they're in their 20s, it's very hard to recognize. And so if you're at least not overexposed on the downside, and you have at least a little bit of risk management, you're at least not going to take a complete bath on your overall portfolio.
Okay, so at the beginning of the interview, you talked about how you blew up in 2000. How were you able to not blow up in 2008?
I used the basic strategies of portfolio management. I used Also, because I was viewing that money as long-term money, I was using dollar cost averaging. Also, I know my risk tolerance, so I tend to use rebalancing techniques. So many of the simple things that we should be using that we're, say, taught in the finance class as long-term investors, based on the rational approach, we don't use. So I like the tools of the rationalist. I disagree with the underlying assumptions. So if you can actually apply a non-emotional strategy, and then also in a down market, if you're still investing for the long term and you have some available cash, I view it as a buying opportunity.
Okay, but you have to admit that you had a fairly sizable drawdown from the peak in 2007, 2008 during that bear market, no matter what type of rotation or portfolio rebalancing you did. Is it true that
Exactly.
you had a...
Yeah. Oh, yeah, I completely agree with you, but like anything else, if that money, if you can really picture yourself that this is your retirement money or this is long-term money that I wasn't going to need for 20 years, if I kept on telling myself at least that once a week, I didn't touch it, and that's essentially the perspective.
Do you remember what you told yourself the week the S&P was trading at 666?
I was like, it's going to be. I probably at that point I probably thought
the market's bottom, Victor. Yeah. What were you telling yourself?
I turned the TV off and I just went to work every day. Honestly, I mean that's why if you get caught up, I mean that's what it actually shows, that if you watch. That's what I was trying to point out before. Is if you're constantly in a negative environment, watching negative news, that is going to that's going to affect your overall decision making. So it's not thinking, you're not being an ostrich, you're not essentially thinking your head in the sand as being an ostrich, but you're trying not to be overwhelmed by all the negative news. Same way on the upside, where everything sounds all rosy and positive, you shouldn't be, you need to try to temper the upside as well as temper the downside, is my lesson in life.
Okay, well, why don't we wrap it up with, you talk about planners and investment advisors and, you know, maybe what people should look for in them, because a lot of them have hurt people. You know, a lot of them, in fact, I think that's why we had the big boom in self-directed trading, is after 2000 and 2008, I think a lot of people who, even though they had a percentage in bonds, percentage in cash, percentage in stocks, said to themselves, well, if there's going to be another mistake, I'm going to make it, okay? Or I could do better than this. And they're right. I mean, a lot of guys at these major mutual fund companies and share brokers, they're not tacticians. They're salesmen collecting assets. So what should we look for when we go to look for an advisor, registered investment advisor, financial planner? You talk about some of the key elements we should look for in your
Sure.
books.
I would say in both my books, which are academically driven, but they're essentially also for traders, individual investors, but as well as academics, but also for, as you say, financial planners and advisors, I would say look for advisors who maybe have heard of behavioral finance. That means they are taking an approach that in their practice is more likely to be academically rigorous, but also they're more likely, in my mind, to want to improve the profession. So I would say if you're thinking about advisors, I would say only about 25 to 30% of them are truly interested and have the insight to want to learn about behavioral finance. So that in itself is an avenue to tell you that you have an advisor who wants to truly learn and help their clients. So I think that's one piece. And also there tends to be in that client relationship, there tends to be a relationship between trust and control. And so that tends to be an inverse relationship. So for example, if you're too trusting an advisor, and as an individual client, you give too much control over to the advisor, then you have the opportunity for a Ponzi scheme. Versus the opposite, if you don't trust the advisor and you're too controlling, you'll never be able to, you'll never accept their advice. So I think, as Ronald Reagan used to say, trust but verify. So I think you have to have a happy medium, but also many of the advisors also suffer from biases. And if they recognize that themselves, then that's half the battle, I believe.
Thank you so much, Victor. And I think that people, and I'm going to look at reading your material. So if I walked into, I don't know, JP Morgan, and I saw an advisor who was watching The Wolf of Wall Street, I should probably run away.
Probably, or if he's taking notes to realize the mistakes that those people make and looking at ways of making himself or herself a better decision making, then maybe not. So it's not your first impression. It's, again, asking certain questions as a client to intuitively see what the responses are. So when you're selecting an advisor or going to an advisor, they tend to be interviewing you. The impression is they're interviewing you to figure out what financial advice to give you. As a client, think about interviewing them to see if they're the right advisor for you or planner.
What a great interview. I'm so glad I reached out to you, Victor, on Twitter. And just, I just took a shot and go, well, this looks interesting. And excellent take. I wish you continued success, that you sell millions of books. And I think you have a great mission, because I think that maybe a year or so from now, there's going to be a lot of turbulence in the markets. And everyone's a genius when things are going well. And I think there's going to be a lot of demand for the work you do with investor psychology and behavior and mentoring people in that way. So continued success. I think you have a great mission. If I could do anything to help you get the word out, let me know. And people could follow you using your name on Twitter at Victor Riccardi, RICCIARDI. Anywhere else people could follow you besides getting your books on Amazon?
Really, the best thing is even if you just search Twitter by behavioral finance, I post a lot of news stories. So I'm maybe promoting my research a little bit at times, but my bias as an academic is I just want people to make better investment decisions. I make a wonderful living at Goucher College. I get to do what I love. I get to teach. I get to talk about behavioral finance. And so this is actually my true passion. So I'm actually a very happy person and very content with what I'm doing. So I'm certainly always willing to help out wherever I can.
Wow. Kindred spirit, although you're happier than me. So, but it was really a pleasure meeting you, Victor. And we'll have this video produced in a few hours. I'll get you a copy of it. Feel free to post it. And thank you so much for sharing what you've learned during your journey of making mistakes on your own and your writings to help millions of other people down the road. They're going to need it, in my opinion, in the next few years. So congratulations to you. Go ahead.
Great. Thank you for having me.
All right, Victor. And that's a wrap for us on Thursday. Thank you all our viewers at investors.com. We'll wrap it up. TGIF tomorrow. Good hunting. Remember, don't just count your pips, count your blessings. See everyone to wrap up the week on TGIF. You're very welcome, Alina. And thank you again, Victor. Good hunting to you and your IRA and your cash account.
Great. Thank you very much. Have a wonderful day.
Bye-bye.